Hello and good afternoon. Holly here reporting to you live from 𝐊𝐴𝐴 studio in Sydney where it's lunchtime, and that means it's time for the mid-market polls. In today's show, we'll be taking a look at the overall Australian share market performance by the mid-session trade and then exploring the biggest winners and losers of the day, including names like Iress, Whitehaven Coal, Fortescue Metals, Redbubble, PointsBet and others. Then lastly, we'll wrap it up by focusing on the stocks that have grabbed headlines today like CIMIC, Swift Media, Decimal in New Zealand and many more. So without further ado, let's get started. Well, the Australian share market extended losses by the afternoon as a slump in commodity prices and mixed global cues weighed on the market sentiment. A sharp fall in iron ore prices dragged down the blue-chip mining stocks like BHP, Rio Tinto, Fortescue, South32 and Mineral Resources. Gold miners also witnessed a selling pressure as the price of the yellow metal fell overnight. Just as the benchmark index, the ASX 200, was trading down by 69 points or 0.93% by lunch. The index opened lower today and tumbled as much as 1% to hit a low of 7,383.10. Then in the overnight trade, the US stocks ended on a mixed note as a fall in energy and tech offset a cheer over the strong retail sales, which signaled the resilience of the economic recovery. Meanwhile, the Dow Jones fell 0.2% and the S&P 500 dropped 0.15% similarly, just as the Nasdaq rose 0.1%. US retail sales rose 0.7% last month, boosted in part by back-to-back school shopping and child tax credit payments, while data for July was revised down. Meanwhile, data on weekly jobless claims indicated that US labor market remained under pressure. The Labor Department data showed that US initial unemployment claims increased to 332,000 in the week ending September 11, compared to the 312,000 during the prior week. The mixed economic data has prompted analysts to speculate whether the Federal Reserve would bring forward its plans for tapering stimulus, and the Fed is widely expected to stand pat at its meeting next week. Back home on the sectoral front, 7 of 11 indices were trading in the red zone, as the materials sector was the worst performer with a 3% in loss, owing to a sharp fall in iron ore prices, which headed toward the $100 per tonne US benchmark. In the overnight trades, the iron ore extended its fall, sliding by a further 8.1% to just over $107.21 US dollars per tonne. All this as material was followed by the energy sector, which dropped 1.7% owing to a fall in crude oil prices, which remained under pressure as an easing the threat of storm threat in US exerted pressure on prices. Among others, utilities, financials, telecom, consumer staples, and A-REIT sectors also witnessed a surge in selling activities. Bucking the trend though, IT was the biggest gainer, rising a very solid 0.9% in line with the US counterpart Nasdaq Composite, which ended higher in the overnight trades. Consumer discretionary and industrial sectors also saw home buying. Then on the COVID-19 front, the state of New South Wales and Australia recorded just over 1,280 locally acquired cases and 12 new deaths within the past 24 hours. Victoria, on the other hand, registered 510 new cases and 1 death. Despite a rise in cases, the state will ease some restrictions from Friday night as it hits 70% of the first dose vaccination target. Meanwhile, up north, Queensland has recorded a new local case of coronavirus on Friday. Moving on now to the next segment, focusing on the top gainers and losers by the mid-session trade. Well, financial software business Iress was the top loser on the ASX with a 10.9% loss. Some of the other worst performers were coal miner Whitehaven Coal, iron ore miners Fortescue Metals, and Mineral Resources, as well as gold miner St. Barbara. Meanwhile, online retailer Redbubble topped the gainers chart by rising 4.5%. Some of the other notable gainers were corporate bookmaker PointsBet Holdings, childcare operator GB Education, and buy now, pay later major Afterpay, as well as English bank Virgin Money. Now it's time for a small break, but stay tuned on 𝐊𝐶𝐤𝐼 TV as we'll be right back to share the latest of the stocks under the spotlight by the mid-session trade.
Hi there, James Preston for 𝐊𝐶𝐤𝐼 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐶𝐼's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to 𝐊𝐶𝐼 TV.
Hello and welcome back to the Mid-Market Pulse. Let's move on now to our final segment and explore stocks that grabbed investor attention today. Well, the first one is engineering and construction group 𝐊𝐚𝐥𝐤𝐢𝐧𝐞, whose share price dropped nearly 1% even after its joint venture secured a contract worth revenue of $265 million. The company informed its shareholders this morning that its group company CBP Contractors, along with its joint venture partner Acciona, has been selected to deliver the Western Sydney Airport airside civil and pavement works. This is the third project awarded by Western Sydney Airport to the joint venture following the earlier award of 2 earthworks packages. Construction will take 2 years while the airport is due to be open in late 2026. And the next prominent news worth looking at is shares of financial software business who tumbled nearly 11% after EQT Fund Management withdrew a takeover bid. Last month, EQT had promised a non-binding takeover offer to acquire all of Iress's shares via a scheme of arrangement. However, both parties failed to agree to a transaction, resulting in the termination of the deal. Meanwhile, shares of Swift Media traded flat by lunchtime after it appointed Brian Mangano as its new Chief Executive Officer. Mangano will replace Pippa Leary, who will transition to a non-executive director role, and Mangano is currently Executive Director and Chief Financial Officer of the company. Well, Swift is a specialist technology company delivering network infrastructure, premium entertainment, and communications solutions nationally. Moving on to the next stock-grabbing headlines, the share price of engineering group Decimal rose over 4% after it bagged a contract from the Victorian government. The company has been awarded $88.7 million for the Barwon Heads Road project, and the scope of the work includes construction of a 2 new lane bridge carriageway, reconstruction, alignment, rehabilitation, and upgrade of the existing carriageway and intersections. The project will commence immediately and is expected to be finalised in the year 2023. Meanwhile, shares of Air New Zealand were down nearly 0.5% after it issued an update on the impact of lockdowns on its business. The lockdown restrictions in New Zealand are costing the company between $45 million to $55 million a month. And only adding to it, the ongoing suspension of New Zealand to Australia travel has resulted in revenue losses of $20 million to $25 million a month. That being said, though, the cargo flights are still continuing with approximately 50 flights per week, as the company is observing a strong demand for air travel across regions in New Zealand that are currently under level 2 restrictions. Moving on now, and the share price of Minbos Resources fell nearly 7% even after Moody's raised its region Angola credit rating. The global agency upgraded its rating of the exploration and development company for the first time based on an improved governance and debt metrics. Moody's cited stronger governance, in particular the quality of Angola's executive and legislative institutions, as indicated in various aspects of their credit profile. Then, software as a service provider 𝐰𝐈 plunged nearly 10% by lunchtime. The company said in an exchange filing that it has completed $11.5 million of placements at 23 cents a share. The offer received a strong response from several leading Australian and offshore investors, and additionally, another $1.5 million in placements was issued by the company's joint lead managers. Meanwhile, Australian department store chain Myer continued its gaining streak for the second day after posting robust annual earnings. The stock was up over 2% and surging as much as 15% in the previous session. The high street retailer's net profit after tax stood at $50.7 million for the financial year 2021. And the company swung back to profit despite an ongoing business disruption caused by lockdowns, thanks to strong growth in online sales. Then, shares of Wesfarmers also gained for the second day after it proposed a revised bid to acquire Australian pharmaceutical industries. In the revised proposal, Wesfarmers proposes to acquire 100% of the shares of API for cash considerations of $1.55 per share. This represents a 35.4% premium after closing price of 1.145 cents a share on the 9th of July. The API board has urged shareholders to consider the revised indicative proposal and allow Wesfarmers to undertake confirmatory due diligence. Well, with that said, that is just about all for now in the Mid-Market Pulse, but keep watching 𝐾alcine TV for more trending updates. 𝐊𝐿𝐥𝐤𝐢𝐧𝐞 signing off.